March was a very interesting month all across the market. Activity actually picked up. Buyers seem to have come back, and then homes have started moving again. But at the same time, prices are still under pressure compared to last year, and buyers are far more cautious than what we've seen in the previous cycle. So if you are here just to know what happened in the market and the prices, right here on this screen, you see the Burlington, Oakville, and Toronto stats, simply just the home prices. And if that's all you need, you can leave now. But prices and interpretations and data are far more important to discuss. So please continue watching and let's get into this. So the big question is, are we heating up again or are we still in the slower market? So let's break it down. Before we jump into Oakville and Burlington, you need to also understand what's happening behind the scenes, because this is what's shaping buyer behavior right now. We're already seeing forecasts being adjusted for 2026. The year started slower than expected and a lot of buyers are still sitting on the sidelines. At the same time, there is uncertainty around interest rates. The Bank of Canada has held rates steady, but inflation, especially tied to the rising of oil prices, is a concern. And that's important because if inflation stays elevated, we know rate cuts are going to be delayed. We are also seeing signs of pressure in the system. Mortgage arrears are ticking up and delinquencies are approaching levels we haven't seen in years. Now, this is not panic, but it does tell you some households are starting to feel the strain. And here's something many people miss. Fixed mortgage rates don't move directly with the Bank of Canada. They follow the bond market. So even if rates stay flat, borrowing cost can still change. When you combine all of this uncertainty, affordability pressure, and the cautious sentiment, it explains exactly what we are seeing on the ground. Buyers are active, but they are selective. Let's start with Oakville. In March, we saw approximately 185 sales with the average price sitting around 1.37 million. Homes are taking roughly 35 days to sell, and detached homes continue to dominate the market. Compared to February, sales increased, prices moved higher. So in the short term, activity is clearly picking up. But when you compare this to March of last year, prices are still down and the market remains slower overall. So here's the reality. Oakville is improving month to month, but still stabilizing year over year. This is not obviously a hot market. This is a transition market. If you zoom out and look at past March markets, you'll see a very clear pattern. We had an aggressive run up in 2021 and 22, followed by a correction, and now we are stabilizing. We all know this is not a frenzy market, but it's also not a downturn. This is what a balanced market looks like. Now, here is where it gets interesting. This is not one market, it's multiple markets. Most of the activity in Oakville is happening in that $1 million to $1.5 million range. That's your move up buyers. Detached homes are still leading, but once you move above that range, things start to slow down. Now, let's zoom in especially on detached homes, because this is really the core of Oakville. In March, detached home prices were sitting around 1.88 million. Month over month, prices were up slightly, but sales actually saw a solid jump as well. So in the short term, detached homes have begun to renewed activity. But when you compare this to the last year, prices are still slightly down and the market is still not as competitive as it once was. Bottom line, detached homes in Oakville are moving, but they are moving at the right price, not any price. What we are seeing in this is buyers are active, but they are very price sensitive and they are not chasing like before. So if you are a detached home seller in Oakville, your strategy matters more than ever. It's simple. If you are priced right, you will get the attention. If not, you're gonna simply sit. Now, let's take a look at Burlington market. In March, we had about 200 sales with an average price around $1 1,080,000. Homes are taking roughly 41 days to sell. Compared to February, sales jumped significantly. New listings also increased. So activity is clearly picking up here as well. But compared to last year, the prices are slightly down and the market remains slower overall. Burlington is seeing stronger short-term activity but still operating in a slower overall environment. Looking at the past March trends, this sits right in the middle. Not peak, not weak. A balanced functioning market. Burlington has more balanced buyer mix. We've got entry-level buyers under $1 million. Move-up buyers are active as well, which is why activity feels a bit more consistent. Now let's take a look at the detached homes in Burlington. In March, detached home prices were sitting around 1.42 million. Month-over-month prices were actually slightly down, but sales volume jumped significantly. So what does that tell us? More homes are selling, but buyers are still negotiating on price. And when you compare it to last year, prices are still down and conditions remain more balanced overall. Detached homes in Burlington are selling, but buyers are making sure they are getting deals. What's interesting here is Burlington detached homes are seeing more consistent demand than Oakville at certain price points because the entry point is lower and that brings in more buyers into Burlington market. If you are selling a detached home in Burlington, you are not short on buyers, but you are competing on price. Burlington has more types of buyers: first-time buyers, move-up buyers, and even downsizers. So there are more people shopping in this market. That's why homes tend to sell more consistently in Burlington. When you compare Oakville and Burlington, the difference is clear. Oakville, higher price point, more exposure to luxury, slower at the top end. Burlington, more balanced pricing, stronger entry-level demand, more consistent activity. Oakville is more sensitive to luxury slowdowns. Burlington is more resilient because of its price mix. And to anchor this, Toronto is a completely different market. It's heavily driven by condos and activities under the $1 million range. Toronto is entry-level driven, whereas Oakville and Burlington are more lifestyle-driven market. So what should you take away from all of this? Buyers, this is one of the best windows you've seen in many years. You have more options, less competition, and more negotiating power. But you still need to act when the right property comes up. For sellers, you can absolutely sell in this market, but pricing is everything. And I'll add this, the last week of March, as soon as the weather improved a tiny little bit in the plus degrees, we noticed the market started getting busy again. We saw more showings, more offers, in fact, multiple offers, and even some homes were selling within 24 hours. So going into the month of April, sellers, listen carefully. Do not make the mistake of getting overly ambitious with pricing. Forget yesterday and be realistic, because in this market, if you are priced right, buyers will show up and you will sell. If you are just testing the waters, buyers will sense it immediately and simply move on. By now, you know today's buyers are not emotional, they are analytical. The stats tell one side of the story, the strategy is the other. If you are thinking about making a move in Oakville or Burlington, whether it's in the next 60 days or 6 months, please follow this channel, because this is where we break down what's actually happening in both of these markets. And if you want a strategy built around your situation, text me directly 647-818-7373 or book a quick 15-minute call using the link in the description. I'm Realtor Roshan and I'd love to see you again.